This is James. James is a perfect model of a responsible, hard-working stickman. He went to a good university, got a stable corporate job, and has spent the last 7 years working 60 hours a week. He doesn't buy expensive coffee, he doesn't go on luxury vacations, and he drives a cheap 12-year-old car. Every single month, James takes 30% of his paycheck and carefully puts it into a high-yield savings account. He has a simple, beautiful goal. He wants to buy a modest 3-bedroom suburban house for his family. According to his calculations, his savings should be more than enough for a healthy 20% down payment. One sunny Saturday morning, James finds the perfect house online. It is listed for $250,000. James calls the real estate agent, schedules a viewing, and walks through the property. He checks the walls, inspects the roof, and nods with satisfaction. This is it. His dream is finally within reach. On Monday morning, James goes to the bank, secures his mortgage approval, and calls the agent to make an official full-price offer of $250,000. He is smiling, his heart is beating with excitement, and he is ready to pop a bottle of champagne to celebrate. But the agent sighs into the phone. "I am sorry, James," the agent says with a cold, flat voice. "The house is already gone. An hour ago, an institutional buyer submitted an all-cash offer for $300,000 with 0 inspections and a 3-day closing window. We had to accept it. Better luck next time." James is completely paralyzed. He is confused. Who is this mysterious billionaire buyer? Who can afford to pay $50,000 over the asking price in pure cash without even looking at the foundation or the roof? James thinks this is just a rare, unlucky coincidence. But over the next 6 months, the exact same tragedy happens to him 12 times in a row. Every time a modest, affordable family home hits the market, a giant, invisible hand reaches down from the sky, throws a massive bag of cash at the seller, and snatches the property away before a regular buyer can even print out their mortgage paperwork. James feels a deep, suffocating sense of despair. He did not lose a fair economic game. He is fighting an invisible monster. Today, we are going to expose the silent corporate war against the middle class. We will pull back the curtain on the trillion-dollar investment funds, the Wall Street algorithms, and the global financial conspiracy that is turning the dream of home ownership into a permanent corporate dictatorship. To understand how James's dream was stolen, we must travel away from his quiet suburban neighborhood and look inside a high-tech skyscraper in the financial district of New York City. Inside this tower sits a giant corporate monster called Apex Capital. Apex Capital is an institutional private equity fund that manages over $100 billion of global investment capital. For decades, Wall Street funds like Apex Capital made their profits by trading corporate stocks, buying high-tech companies, and investing in global shipping industries. But after the major financial crises of the past decades, the stock market became highly volatile and unpredictable. The corporate executives at Apex Capital sat around a massive marble table and asked their data analysts a critical question. Where can we park billions of dollars of cash where it will generate guaranteed, predictable, inflation-proof profits forever? The lead data analyst opened a digital map of the world and pointed at the average residential suburbs. "Single-family housing," the analyst said. "Humans will always need a roof over their heads. If we buy the technology companies, they can go bankrupt.
Now look at this mess.
But if we buy the physical earth under people's feet, we control the most fundamental human need. And the best part? We don't just buy the luxury mansions. We target the cheap, affordable starter homes that regular working-class families buy. If we buy enough of them in a single city, we create a monopoly. We can raise the rent as high as we want, because ordinary people will have nowhere else to go." To execute this global property raid, Apex Capital did not hire human real estate agents to visit houses and talk to sellers. Human beings are too slow, too emotional, and too expensive. Instead, the fund developed a hyper-advanced artificial intelligence algorithm, codenamed Project Monopoly. This algorithm is directly connected to every digital housing database, foreclosure auction platform, and local tax registry in the country. Project Monopoly scans thousands of property listings every single second. It analyzes local school districts, proximity to public transport, average crime rates, and employment statistics. The moment a house that fits the criteria is uploaded online, the algorithm calculates its future rental return within milliseconds. If the numbers look green, the algorithm automatically generates a legally binding all-cash offer that is 20% higher than the market value. It automatically signs the digital contract and transfers millions of dollars from Wall Street directly to the seller's bank account before a human buyer can even call the realtor. James was not competing against other hard-working families. He was fighting a multi-billion-dollar supercomputer designed by the smartest mathematical minds on Wall Street to wipe out the middle class. Within 3 years, Apex Capital and a few other mega funds bought over 40% of all affordable starter homes in James's city. They created a devastating economic phenomenon called the artificial housing shortage. Because Wall Street removed thousands of homes from the open market, the remaining houses became incredibly rare and expensive. A basic, simple home that used to cost $200,000 spiked to $450,000. For regular stickmen like James, whose salaries only grew by 3% a year, buying a home became a mathematical impossibility. But the trap was much more sinister than just high prices. One evening, completely exhausted by his failed search, James received a notification that his current rental lease was expiring. He opened the letter from his landlord. He expected a standard, small inflation adjustment. Instead, the letter stated that his monthly rent was increasing from $1,500 to $2,800. If he could not pay, he had 30 days to pack his bags and vacate the apartment. James was furious. He drove down to the rental office to look for his old landlord, a friendly retired stickman named Mr. Smith. But when he arrived, the office was gone. The building had been bought by a subsidiary company owned by Apex Capital. A cold corporate secretary behind a glass window looked at James and handed him a brochure. "Mr. Smith sold his entire portfolio to our investment group," she said flatly. "We use an algorithmic dynamic pricing software to calculate rental rates based on global market demand. We do not negotiate contracts. You pay the market rate, or our automated legal system will process your eviction on the 31st day." James looked at the brochure and realized a terrifying truth. The very same corporation that used a Wall Street algorithm to prevent him from buying a house had now bought his rental apartment. They artificially raised the price of buying a home so high that James was forced to remain a renter forever. And then, they raised his rent to strip away his ability to save any money. James was trapped in a perfect corporate loop. His hard-earned money was being sucked out of his pocket every single month and sent directly to a Wall Street bank account to fund the purchase of even more neighborhood homes. James sat in his car, looking at the corporate brochure in his hands. He felt a deep, fiery wave of anger. The system was rigged. The American dream of owning a piece of land, building a family, and securing generational wealth was being systematically erased by corporate spreadsheets. But James refused to surrender. He realized that if you try to fight a multi-billion-dollar algorithm using 20th century financial rules, you will lose every single time. To survive the modern corporate monopoly, an ordinary stickman must change his entire economic strategy. James started researching the weaknesses of institutional real estate funds. He discovered that Wall Street corporations have a major vulnerability. They rely completely on high density, standardization, and massive scale. Their algorithms love cookie-cutter suburban neighborhoods and giant urban apartment complexes because they are easy to manage from a remote computer screen. But corporate algorithms absolutely hate unique, unconventional, and hyper-local real estate opportunities. James decided to pivot. He stopped looking at standard suburban houses listed on major national websites. Instead, he started hunting for what financial experts call off-market anomalies. He drove around older historical districts, looking for properties with overgrown grass or signs of neglect.
It should be right here!
He found an old, historic duplex property owned by an elderly stickman who wanted to retire to another state, but didn't want to list his home online because he hated corporate realtors. James knocked on the door, sat down with the owner, drank coffee, and offered a fair price directly, bypassing the digital MLS databases entirely. The algorithm never even saw the property. Furthermore, James used a strategy called house hacking. The duplex had 2 separate living units. James moved into the smaller side of the building and rented out the second, larger unit to a responsible young professional stickman. The monthly rent from his tenant covered 80% of James's entire bank mortgage. Suddenly, James was no longer paying for his own housing out of pocket. He turned the tables on the system. Instead of being a victim of the rental trap, he used local human connection to secure an asset and protect his income from corporate inflation. How can a regular stickman defeat the Wall Street monster and protect their financial future? You must adopt 3 defensive wealth-building principles.
Opportunity.
Principle number 1
this sector,
is the off-market commandment.
40% rise
If you are buying real estate in the modern economy, stay away from the highly competitive digital pools where Wall Street algorithms bid. Build relationships with local people. Talk to neighbors.
Hey there.
Find independent sellers.
Grab a seat.
And negotiate human
We
to
were
human.
just about to discuss
Wholesalers
how we
and
can improve
local
these
pocket
metrics.
listings are your shield against the corporate supercomputers. Principle number 2 is the multi-unit priority. If you are struggling to afford a home because corporations have inflated the prices,
As you can see from the
look
charts,
for duplexes,
our Q3 growth projections
triplexes,
are
or
significantly
properties with
exceeding
independent
expectations.
guest houses.
This
Use the rental income from your tenants to subsidize your mortgage debt. Let the market dynamics work for you instead of against you. Principle number 3 is radical financial liquidity. If the housing market in your specific city is completely monopolized by institutional funds, do not force yourself into a predatory loan just to buy a house. Rent the cheapest apartment you can find, keep your living costs
As you can see from the graph,
microscopic,
our
and
Q3
invest your
profits
savings into
skyrocketed past
diversified
all
global stock
expectations.
indices or high-yield business assets. Do not let corporate landlords trap your capital in a bad real estate market. You can build true financial freedom without owning a single brick, as long as you control your cash flow and protect your principal. James stands on the porch of his duplex. He looks at his garden. He is no longer running on the corporate hamster wheel. He defeated the silent war not by matching the power of Wall Street, but by changing the game entirely. True security is not found by blindly following old societal timelines. True security belongs to those who analyze the system, adapt to macroeconomics, and protect their freedom at all costs. Stay sharp, watch the corporate moves, and never let an algorithm dictate your destiny.